Friends, welcome to the sessions on direct taxes. These sessions are being planned in such a way where my whole effort is to see that again I don't bundle you with too much of the notes. Instead, as a student, if a student is preparing by taking a particular textbook, how he is going to make an effort and what is the way he is going to prepare, in the same way these lectures are being planned. That is to tell you about the direct tax paper. My own observation about this paper is, even at the final level when student is preparing, 30% of the paper is a plain paper. That is, they are testing whether the student well understood the concepts and the sections. Remaining 30% is with amendments brought by the respective Finance Act and related parts in the law, whether he well prepared for that particular aspect or not. Then of course, remaining 30% is coming with the case laws. So what I find the difference between your PCC or IPCC preparation and the final preparation is, the main objective here is, having understood the provision of the law, are you able to link up that particular understanding with the situation which is being presented? As a paper valuer also, what I am looking at while valuing the paper is, I am not bothered whether you are writing a correct answer or not, but I am very much bothered whether you are able to present in your answer, this question pertains to this particular section and what that particular section says. If you are able to come up to that particular point, we are awarding the marks. So what is most important part in the learning at this stage is, one aspect is already you are through with certain provisions. Whether the link up part you are able to do it or not to that particular question. In that way, in my lecture, many number of times the same provision gets revised, because we are going to solve about 40 questions at least in the topic of capital gains, which are being previously tested. As a result of the first year, we are discussing the provisions, then I'll also make you to learn how to link up this particular knowledge with the questions which are being tested in the examination. So to make a beginning, let us start with the tax rates, because any chapter when you do and you try to do the problems, you must be well versed with the rates of tax. With respect to the rates of tax, let me tell you, rates of tax must be viewed in a way like, there are certain rates which are already given in the Act, like tax on long-term capital gain, tax on short-term capital gain. They are all being well given in the Act itself. Then what the respective Finance Act will do, on all other incomes, at what rate those incomes are going to get taxed. In each finance budget, they are going to prescribe these rates. Of course, for the coming May 2012 and November 2012, definitely there will be a question where you need to compute the tax. And it is very, very relevant, because there is a change in the rates of tax, and so much of the hike is there as far as limits are concerned. Of course, rates continues to be 10%, 20%, 30% in case of the individual, but the basic limits and then slab rates, they are changed. And one more important change brought by the Finance Act is, earlier we used to have, as far as individuals are concerned, individual other than women and senior citizen, women and the senior citizen. And senior citizen, who is a senior citizen earlier? A person who either attained 65 years or more than 65 years during the relevant previous year. But today I brought two categories where that 65 got reduced to 60 years, and one more category I am having is a person whose age is either 80 years or more than 80 years. In a way to make you to understand, there is a senior citizen and super senior citizen. So now in this context also try to understand, in case of the women SSEs and in case of a person who attained 60 years or more than 60 years, are in the category of the person who attained the age of 80 years or more than 80 years, for them to give the benefit of that higher basic limit, please do remember that they must be residents. What I would like to communicate is, in case if there is a woman SSE, she is a non-resident, then she must be brought to the normal individual category. This benefit of higher slab rate will be given only in a situation of that woman SSE or the person who attained 60 years or the person who attained 80 years happens to be the residents in India. So kindly make a note of the tax rates. That is, tax rates applicable to individuals brackets other than resident women SSEs comma person, that is individual who attained the age of 60 years oblique 80 years. So in case of the individual and HUF, other than those individuals, what are the tax rates? Up to 1,80,000 rupees nil, up to rupees 1,80,000 nil, 1,80,000 1 rupee to 5 lakhs 10%. So friends, let us suppose a person is having 5 lakh rupees of income. An individual is having a 5 lakh rupees of income. What will happen? 5 lakhs minus 1,80,000 is 3,20,000. On that 10% makes it to 32,000. Then next slab is where income is in between the range of 5 lakh 1 rupee to 8 lakhs. 5 lakh 1 rupee to 8 lakhs. 32,000 plus 20%. 32,000 plus 20% brackets total income minus 5 lakhs. Total income minus 5 lakhs. So friends, let us suppose a person is having 8 lakh rupees of income. What will happen, friends? 8 lakhs minus 5 lakhs is 3 lakhs. On the 3 lakhs, 20% works out to be 60,000. 60 plus 32,000 makes it to 92,000. Then, where the total income exceeds 8 lakhs, what is it? 92,000 plus 30% of total income minus 8 lakhs. So, what is a point that you should remember? Basic exemption limit is 1,80,000. 180 to 5, it is 10%. 5 lakhs to 8 lakhs, it is 20%. And over and above 8 lakhs, it is 30%. Then, of course, in case of the woman, resident woman, if you remember first basic limit, that is enough. That is 1,90,000. Write down. For resident woman SSEs, who are below 60 years, basic limit up to which there is no tax is 1,90,000. Rest of the things are same. That is, from 190,000 1 rupee to the 5 lakhs, it is 10%. 5 lakhs to 8 lakhs, it is 20%. Over and above 8 lakhs, it is 30%. No need to write. Third situation is, in case of individual resident in India, whose age is 60 years or more, and less than 80 years, there also, if you know the basic limit, that is enough. That is, basic limit up to which there is no tax is rupees 2,50,000. Of course, rest are the same, like 2,50,000 1 rupee to 5 lakhs 10%, 5 lakhs to 8 lakhs 20%, over and above 8 lakhs 30%. Then the fourth category, resident individuals who is of the age of 80 years or more, basic limit up to which there is no tax is rupees 5 lakhs. That is, for this senior gentleman, there is no 10% rate. Once he crosses 5 lakhs, from 5 lakh 1 rupee to the 8 lakhs, it is 20%, and above 8 lakhs, it is 30%. And please do remember, Why such kind of distinction between male and female, and a youngster and a old man? See, India is a country where we respect women. There is a saying also, which country will have a growth? Which country will have prosperity? Country where women are being well respected. Country where senior citizens are given due respect. Considering this, Government of India is kind enough to say that a higher amount of income for them we are not going to tax. That is, their basic limits are more. Of course, to say positively, this is the point. But other way around, negatively to put the point, in each house there will be women SSEs. In each house there are senior citizens. What the people are doing? Actually, that woman is not carrying out any business, nor that senior citizen is carrying out any business, nor is having income. But the person who is earning the income, he is maintaining those people. So what the people are doing, although there is a good intention behind this particular law, many of us advisors, when a person comes to us to file an income tax return, why don't you also file your wife's income? Why don't you also file your mother's income or mother's income tax return and your grandfather's? They don't have the income, sir. You divert your income to them. Thereby family tax obligation comes down. Of course, already since in the country the tax rates are very high, one need not be counseled to that extent how to reduce their tax burden. Today, SCs themselves are quite intelligent and come and ask us to file the income tax returns for the whole family also. But in any case, thanks to the law, at least it gave due respect to the women SSEs and the senior citizens. But point that as a student you should remember is, when you are reading the problem, be careful if the SSE is a woman SSE but a non-resident. Senior citizen is a person who is a non-resident. Then he should be brought to the normal individual category and the basic exemption limit is 1,80,000 only. Then the next point is like surcharge. As far as individuals and HUF is concerned, friends, there is no surcharge. Make note. There is no surcharge in case of individuals and HUFs. Of course, I am making you to write only those points which are relevant for your examination. Other way around, rest you generally listen the lecture and try to remember. And these lectures are to be listened in such a way that you don't get once more time to read again. With that intention, if you listen, probably the e-video content could be well taken. Of course, at the final level, when you are attending any coaching session, you should go with a mindset that I am going to learn this particular subject and read this particular subject along with my friend, not that I am going to the coaching center to learn. Because you have 8 subjects, it's a very vast this thing. You are coming to a teacher with an expectation of a help, that how to comprehend it. Other way around, once you open the book and read, It's not that you can't understand. In my personal opinion, any student should attend the coaching center only for the reason that there must be some regularity in studies. Other way around, after crossing 18 years, friends, I don't think so that you really need a teacher for understanding any subjects. So, this problem will be more in case of students who are listening my lectures on a e-video platform, because since already teacher is in my laptop, let me take a chance of reading at a later point of time, because we generally purchase a book with a great feel that we should read, and books go on compiling. So kindly don't do that. Have a regular study. That is most important for succeeding in any examination. Friends, coming back to the point, cooperative societies. As far as cooperative societies are concerned, where the total income does not exceed 10,000, right from the 1 rupee it is 10%, and where it exceeds 10,000 but less than 20,000, that is on the first of 10,000, 1,000 rupees, and on the above it is 20%. And in case if the total income exceeds 20,000, on the first 10,000, 1,000, on the next 10,000, 2,000, 3,000, plus on the excess over and above that 20,000, 30%. That is for a cooperative society. Let us suppose it is having say 35,000 rupees. What should be the tax? On first 10,000, 1,000, on the next 10,000, 2,000, on the balance 15,000 it is 30%. On 15,000, 30% works out to be 4,500. 4,500 plus this 3,000 makes it to 7,500. And of course, there is no surcharge for the cooperative society. Then as far as the local authority is concerned, it is also subjected to the tax at a flat rate. What is flat rate? What is slab rate? For individual, you have got slab rates from this income to this income, this income to this income and all. But other than individuals and HUF, right from the rupee one, they are being subjected to the tax as a point. So for a local authority, it is 30%. Of course, even the local authority, there is no surcharge. Coming to the firm, it is 30%. For firms, partnership firms also, there is no surcharge. Make note. In case of the firm, in case of the partnership firm, 30% of total income, 30% of the total income is the tax amount, There is no surcharge in case of the firms. There is no surcharge in case of the firms. Then friends, companies, yes, at the final level you should be very careful with the rates of tax. Of course, if you are the SSE is a domestic company, the rate of tax continue to be 30% of the total income. If it's a foreign company, 40% of the total income. But please do remember, for company SSEs there is a surcharge. In case if their total income exceeds 1 crore. For domestic company, the surcharge is 5%. For foreign company, thanks to the lawmaker, that it is only at 2%. Otherwise, which foreign company will come and do its business here in a country where we don't know when the electricity will be there and when it will not be, when Bandh will be there. So law is kind enough at least in surcharge. Of course, law is not kind enough in the tax rate, because domestic company is at 30%, whereas foreign company is at 40% of the total income. Whereas for the domestic company, yes, it is a 5% surcharge, and for foreign company, the surcharge happens to be 2%. But that surcharge concept for a company comes only when, whether it is a domestic company or a foreign company, only when its total income exceeds 1 crore. Right. Make note of this point. In case of a domestic company, 30% of the total income. In case of a foreign company, 40% of the total income. Now, surcharge in case of company SSEs. Surcharge in case of company SSEs. Provided their total income exceeds 1 crore. Their total income exceeds 1 crore. In case of domestic company, surcharge is 5%. In case of a foreign company, surcharge is 2%. This 5% or 2% is on what? Of the income tax. 2% of the income tax. You calculate the income tax. On that income tax, you calculate at the rate of 2% on that particular income tax. Friends, in this context, one should be well versed with the concept of the marginal relief. What is this concept of the marginal relief? See, in the presence of the surcharge, a situation may arise, like a person whose income is 1 crore 1 lakh may be paying more because of the surcharge, and a person whose income is 1 crore, that is 1 crore other way around, may be paying less. That is, in the sense, naturally now, a person whose, that is a company whose income is 1 crore 1 lakh will be paying more. A person whose income is 1 crore will be paying less. What is the big deal in it? See, a person whose, that is a company whose total income is 1 crore is not subjected to any surcharge, whereas a person whose income is exceeding 1 crore is subjected to the, what is it, surcharge. So let us suppose my income is 1 crore 2 rupees. I would like to reduce that to 2 rupees and bring it to 99,99,999. Otherwise, I am unnecessarily exposed to the surcharge. So, law is kind enough to give the marginal relief. How this concept of marginal relief is going to work? Right? See, let us take a small example. Later you can make note of it. What is the tax on the total income in case if the total income is 1 crore? 30% means 30 lakhs. And there is no surcharge. Let us suppose my income is, that is my company's income is 1 crore 1 lakh. Then what will happen? On 1 crore 1 lakh, 30% is what? 30 lakhs 30,000. On that, let us suppose it's a domestic company, 5% is the, what is it, your surcharge. So that and all makes it to what? On 30 lakhs 30,000, 5% works out to be 1,51,500. 1,51,500. So now put together, what is it? 31 lakhs 81,500. Friends, tell me, which fool is going to disclose that his income is 1 crore 1 lakh? Because the entire 1 lakh is eaten away. Over and above that, 81,500 extra I am paying the tax. Isn't it or not? So a person who is having 1 crore 1 lakh always try to bring down his income to the, what is it, 1 crore only. Unless you tell some way by which that fellow can be well saved. He don't mind paying that extra 1 lakh, but you are asking 81,500 more also to be paid by him. Right? Already he is crying with the surcharge concept. That is, when my income is only 1 crore, law is not asking me to pay the surcharge. The moment I say it is more than 1 crore, with all hard work I earned 1 lakh more, but the law is harsh enough to say that you should not have earned 1 lakh, because since you have earned 1 lakh more over the 1 crore, we are asking you to pay 1,81,500 more. Then naturally people try to undisclose their income of that 1 lakh. So law says we will restrict that surcharge only to 1 lakh. Let us suppose take another situation. 1 crore 2 lakhs is the total income of a company. On 1 crore 2 lakhs, what is the tax? That is 30 lakh 60,000. On that 30 lakh 60,000, 5% works out to be what? 1 lakh 53,000. Put together it is 32 lakhs 13,000. If you ask that fellow to pay 32 lakhs 13,000, he will cry, because if his income is only 1 crore, he is going to pay only 30 lakhs. Having earned 1 crore 2 lakhs, now you are asking him to pay 32 lakhs 13,000. He don't mind paying that 2 lakhs, but extra 13,000, why he should? Right. Then where this gets broken? Let us suppose 1 crore 3 lakhs. On 1 crore 3 lakhs, what will happen? That is 30 lakhs 90,000 is a tax. Surcharge is 1,54,500. Put together is 32 lakhs 44,500. Yes, here there is no marginal relief, because he has earned more by how many lakhs? 1 crore 3 lakhs means 3 lakhs more he has earned, and your extra tax is only 2,44,000 over and above 30 lakhs. There we don't have any marginal relief. So marginal relief comes in a situation where your excess income over 1 lakh, whatever it is there, your tax obligation is exceeding by that excess amount, then the marginal relief will come. Write down, friends. In case of a domestic company and foreign company, whose total income exceeds 1 crore, whose total income exceeds 1 crore, then the aggregate of income tax, then the aggregate of income tax and surcharge shall be restricted to tax on total income tax on 1 crore, sorry, tax on 1 crore plus brackets total income minus 1 crore, plus total income minus 1 crore. So you can take an example, that is example 1. Total income is 1 crore 2 lakhs. Then first tax on 1 crore, tax on 1 crore is equal to 30 lakhs. Total income minus 1 crore is equal to, total income minus 1 crore is equal to 1 crore 2 lakhs minus 1 crore is 2 lakhs. So put together is how much, friends? 30 lakhs plus 2 lakhs, 32 lakhs. That much only. Otherwise, in the normal case, without this marginal relief, in a normal case, what would have happened? What would have happened on 1 crore 2 lakhs? How the normal way the tax is? Write down. Normal tax on 1 crore 2 lakhs is tax 30 lakh 60,000. How that 30 lakh 60,000, friends? On 1 crore 2 lakhs at the rate of 30%. Add surcharge at 5%. Add surcharge at 5%. 1 lakh 53,000. Put together is 32 lakhs 13,000. However, marginal relief provides that SSE is subjected to tax at rupees 32 lakhs only. Next, take one more example where marginal relief is not possible. That is example 2. In case if the income, total income, in case if total income is 1 crore 3 lakhs, then tax on 1 crore 30 lakhs plus total income minus 1 crore, that is 1 crore 3 lakhs minus 1 crore, that is 3 lakhs. Put together is what, friends? 33 lakhs. Now, normal tax on 1 crore 3 lakhs. Normal tax on 1 crore 3 lakhs. What is normal tax on 1 crore 3 lakhs, friends? That is 30 lakhs 90,000 plus that surcharge of 1 lakh 54,500. Put together is what, friends? 32 lakhs 44,500. So which the SSE would prefer to pay? Only the normal tax, which is lower, is the point. Then, friends, one point by now we are all clear. There is no surcharge except in case of domestic company and foreign company whose total income exceeds 1 crore. There are other taxes called as educational cess and secondary higher educational cess. Irrespective of who is the person, what is his total income, everybody is subjected to the, what is it, educational cess and secondary higher educational cess. Only thing that you should remember is with respect to the surcharge. Other way around, for any person, irrespective of the level of income, he is subjected to the educational cess and a secondary higher educational cess. Make note. In case of all the SSCs, they are subjected to, their income tax is subjected to, educational cess and secondary higher educational cess at the rate of 3% put together, I am saying. Let us suppose there is a foreign company or a domestic company whose total income is exceeding 1 crore. Then please remember, this educational cess and secondary higher educational cess you are calculating on what? Income tax plus surcharge. Please make note of this particular point in your mind, because when you sit in the exam, then the doubt will come. Right? Generally when we are reading, we don't get much of a doubts. When we sit in the exam, we get the doubts. This happens in case if you are not practicing the problems before you go to the exam. See, my point here is educational cess and secondary higher educational cess being calculated on income tax is not a problem for any SSC, except in case of domestic company and foreign company, that educational cess and secondary higher educational cess put together at 3% is to be calculated on the sum total of the income tax plus surcharge. Then friends, there is no need for you to write, but just remember rounding off of the tax. Which section deals with this particular subject? Section 288B deals with this particular section. See, rounding off you can't make at the income level. What we are discussing here is after you calculate the entire tax, that the tax amount is to be rounded off to the nearest multiple of 10 rupees. Let us suppose it is coming to 99,244 rupees. What is the nearest multiple 10? 99,240. If it is 99,245 or more than that, then it is 99,250. So this rounding off you should be clear with. See friends, when we are valuing the papers, try to understand. Let us suppose I made a wrong calculation at that level. How many marks are going to get reduced? One student will be asking. Because students have got many apprehensions about the modus of valuation. Let me tell you friends, we as a valuers will always try to help the students. We don't take a binoculars and see your paper to find out where is the mistake. It is other way around. I am taking a binoculars to see where there is a point so that I can award the marks. But when it comes to the point of exemption, yes, once your marks are crossing 60, definitely I am not going to excuse you for even this small mistake of wrong rounding offs. Because once I say you are being exempted from this particular subject, that means it is a deemed pass. Because many serious preparers will fail in exam only with a 10 marks or 15 marks gap. I always tell to the students, if your marks are above 180, below 200, the problem is not in understanding the subject. There is a lack of practice, lack of presentation. For a 400 marks in a group, if you are getting below 150, try to correct your concepts. That means you don't have the proper preparation, proper understanding. If you are getting below 100 means what? For 400, if you are getting 100 or below 100, that means better you stop the course. Right? That means either you are not understanding at all the concepts, or other way around, you never prepared and just made an attempt. People say that in CA pass percentage is 8%, but I say it is 80% as a paper valuer, because out of 100 papers, 80 papers people never prepared and came to the exam. Out of the remaining 20 papers, we are passing, friends, 16 students. That means our pass percentage is what? 80%. So, one more important thing is, in CA examination, even if there one paper you are not able to fare well, don't lose your heart. Write all the papers so that you will be knowing where you stand. Many a times it so happens that the paper which we feel that we have not fared well, there we get more marks, and the paper which we feel that we have done very well came with 40-42 marks. So please give the job of valuation to the institute. Don't take that burden on you. Please write all the papers with the same enthusiasm. Now, coming back to the point, today we are living in an environment of E. Not only classes are being done in a e-video session. Taxes you are asked to pay electronically. Returns you are asked to file electronically. So a day will come when the students will never attend a coaching session like this. Teacher will be delivering the lecture from studio, and the students are listening the video classes across the country. Yes, what considered to be impossible task when I started this particular e-learning initiative 5 years back, today I am very happy person to see that not only this concept is being driven by me, many of the senior faculty came to this particular platform. Of course, here all this we are discussing because taxes are now necessarily to be paid by electronic format, and this is made mandatory for which SSCs? For the company SSCs and those SSCs other than company SSCs whose accounts are to be tax audited under section 44 AB. Now, I think all of you are well aware that tax audit last year itself the limit is increased from 40 lakhs to 60 lakhs. So, to which SSCs it is mandatory to pay the taxes electronically, that is for the company SSCs and the persons who are subjected to the tax audit. Now, we are all moving in an environment where students are not asked to write 8 marks or 10 marks questions. 2 marks, 1 mark questions are also there. There probably this point may make a relevance. Please make notes. That is e-payment of taxes. E-payment of taxes. It is mandatory for company SSCs and SSCs whose accounts are subjected to tax audit under section 44 AB, under section 44 AB. Then friends, e-filing of returns, to whom it is mandatory. Of course, it's optional for anybody, but it is mandatory for whom to make e-filing. Then one more important thing is digital signature. Of course, as a final students, you might have already experienced the problems with digital signatures and uploading using the digital signatures. Friends, please remember, company SSEs and partnership firms whose accounts are to be audited under section 44AB, and individuals and HUFs whose accounts are to be audited under section 44AB today mandatorily need to make e-filing of the income tax return. And then, of course, now companies and firms necessarily need to make e-filing of their income tax return using by affixing the digital signature is a point. So, point here is individuals and HUFs whose accounts are to be audited under section 44AB need to file the return of income by e-mode, electronic mode, but affixing the digital signature is not a must kind of thing. If it is being done with digital signature, the comfort is what? The comfort is, again, I need not post the copy of that to the Bangalore, right? Please make note. E-filing of return. It is mandatory. It is mandatory for companies of course, for firms only when they are subjected to 44AB tax audit. For companies irrespective of it. Next, firms requiring audit under section 44AB, firms requiring audit under section 44AB, an individual and HUF, whose accounts are subjected to tax audit under section 44AB. One more important point is usage of digital signature. Usage of digital signature, write down. It is mandatory for companies. It is mandatory for companies and firms to file the return electronically with digital signature. Of course, I am not making you to write the point separately that individuals and HUFs, there is no need, or it's not mandatory otherwise. If they do it, well and good. That one more procedure they are avoiding of sending, again making a hard copy being posted to the Bangalore. Other way around, it's not mandatory for them. With that, I concluded the first session, that is, we discussed on tax rates and then e-filing of income tax returns and e-payment of the taxes. In the next session to follow, we take up the topic of capital gains.